Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So Tesla is just about to report their Q2 2021 earnings. And while everyone, especially the finance media, is going to be focused on the ultra short term, I thought it was worthwhile in this video to run the clock forward about 5 years to share some predictions of what I think Tesla is going to look like in 2026. Now, to many of you watching, 5 years may seem like a long time, but to be honest, for me, 5 years is absolutely nothing. I'm a very long-term investor. I'm really looking out over a multi-decade period of time. In this video, however, we're just looking out 5 years into the near future to see where Tesla's going to be, still early in their growth story. So I'm just going to come right out and say it. If you happen to be an investor who believes that 5 years is a long investment horizon, you, my friend, unfortunately have found yourself on the wrong YouTube channel. Maybe go search for the 5 stocks to buy right now. That might be a little bit more useful for your investment strategy. So in this video, I'll be sharing my newly updated Tesla delivery estimates running all the way out until the end of this decade, both the bull case and the bear case. I'll be talking about every product I believe Tesla will have on the market, including new vehicles and other products. I'll be detailing all of Tesla's revenue streams, including total revenue estimates. I'll be talking about profitability, robo-taxis, Tesla's newly evolving AI business, and ultimately Tesla's valuation, and therefore what I believe Tesla's stock will be worth in 2026. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. So first of all, let's look at my estimates for Tesla production running all the way out until the end of this decade. And I'm going to show you guys my bull case, my base case, and my bear case. Now just quickly, the reason that I actually model these 3 different scenarios is simply to keep myself in check. I've learned through life that I have a clear optimism bias. People throughout my life have been telling me, you're very optimistic, you're very positive. I notice with my own predictions, especially on timelines, I tend to be ultra aggressive, even when I think I'm being relatively reasonable. I definitely have a little bit of a reality distortion field. Part of that I think comes from my innate self-confidence, and part of that just comes from being overly optimistic, especially on timelines. I think Elon Musk and I have that in common. Having an awareness that I am quite optimistic doesn't mean I'm going to change my expectations or my predictions. I'm still going to share what I actually think is likely in the bull case and the base case. Some of you may disagree, but hey, I'm not going to change who I am or the way that I think about the world. If I did that, I'd stop approaching tens in the street, assuming of course they want to go out with me. I mean, I'm me, who wouldn't? You might be surprised how effective an optimism bias can actually be. So with that said, let's get into my delivery estimates. So here we are, starting with my bear case estimates for Tesla production/deliveries. Now some of you might say, hang on a minute, aren't production and delivery separate things? Yes, they are, but for the purposes of this video, I assume they're the same. Why would that be? Well, Tesla continues to drive their costs down. They're going to produce new vehicles in new market segments. I believe that Tesla is going to be production constrained throughout the entire decade. Therefore, they will sell every vehicle they produce. Therefore, we only need to use a single number. As I said, I've just updated these estimates. I'm now suggesting 0 production from Berlin in 2021. Shout out to the red tape and bureaucracy in Germany. And I'm also assuming in the bear case, 0 production from Austin, even though I actually believe it's likely there'll be some production. And I'm assuming that Tesla builds 1 new factory every year starting in 23, new factory in 24, 25, 26, 27, 28, 29, and 30. Ultimately getting to around 14 million vehicles delivered in 2031, 10 years from now. By mid-decade, 2026, in my bear case, we're looking at around 5.6 million vehicles. We're now looking at my base case estimates, slightly more aggressive, at around 7.9 million vehicles delivered in 2026. Now I know some of you are thinking, dude, how high are you right now? And the answer to that question is yes. And finally, now my bull case suggesting over 9 million vehicles delivered in 2026. But for the purposes of this video, I'm going to use my bear case estimates. Like I said, just correcting a little bit for my optimism bias. But honestly, between you and me, I think that the bull case is actually more likely than the bear case. I have each factory steadily ramping towards production capacity of around 2 million per year, and I'm factoring in about 90% utilization with 10% downtime. If you pay attention just to the rate of ramping here, each factory assuming first year of production around 50,000 vehicles, the next year around 180, the next year only 360,000. And just for example, it's taken less than 2 years for the Shanghai factory to reach an annualized rate of production of over 400,000 units. So I actually believe this rate of ramping is relatively bearish. We've basically got the same level of growth, the same rate of growth ramping up all the way until about 1.86 million units, and that's the same for every subsequent factory. Tesla in total only needing to produce another half dozen or so factories to get to that target of around 20 million vehicles per year by around the end of the decade. So in 2026, 5 years from now, what vehicles do I expect Tesla to actually be producing, and how many of those will be selling? So the Model S and X will probably still be around in 2026. However, I think their sales numbers may be around 100,000 per year. So small, so insignificant, it's not even worth counting them in the total deliveries figures. Therefore, I'm not going to. Let's ignore those two vehicles. They're cool. It's a great way for Tesla to start implementing new technology and eventually driving the cost down, but they're irrelevant to the long-term picture for Tesla. The Model 3 and Y I expect will be selling around 2 million vehicles per year in total combined, with the majority, probably 2/3, maybe even more of that, just made up of the Model Y. It's effectively a better version of the Model 3. Now, some might argue that's not really the case, but if we think about it, it's got very similar performance and more storage. Therefore, it's a little bit more functional to the wider marketplace. So we're at 2 million annual vehicles per year just from the Model 3 and the Model Y. By this stage, the Cybertruck will be well and truly ramped, and I expect the Cybertruck alone will be selling around 1 million units per year, making it one of, if not the best-selling pickup truck in the United States. And of course, there'll be some global deliveries as well, but the US is really where I see the bulk of Cybertruck sales taking place. That puts us at 3 million units per year. I also believe that Tesla by this stage will have released the Tesla van, selling around 500,000 units per year. This could be a little bit above or below that figure, but that's my approximate guess for this one. However, I think there's going to be a product that launches between the Cybertruck and Tesla's van, and that is the so-called Model 2, Tesla's $25,000 vehicle. And I actually believe there's going to be at least 2, maybe 3 or more variations of this particular vehicle. I think Tesla's going to develop this platform, invest aggressively in extremely expensive equipment to ultimately reduce down the manufacturing costs that only make sense to invest in if they're doing very high volumes of these vehicles. In fact, here's a prediction. I think with the Model 2, Tesla is going to invest in the equipment necessary to do a gigantic single casting for the entire vehicle body. Now, of course, this may not technically be feasible, but the point that I'm getting at here is there's certain things that Tesla can't afford to do with the Model 3 and the Model Y because they don't have the economies of scale. If they're only selling 500,000, a million, 2 million vehicles per year, not really there. But if they've got a vehicle that's selling 4+ million units per year, they can go absolutely ham investing in technology and equipment that no other automotive manufacturer can justifiably invest in, and therefore no one can produce vehicles for the same cost as Tesla, and therefore they're in really deep shit. You know what? We've got the Gigapress for the Model 3 and Y. Let's call this the TerraPress, except let's spell it Terror, because that is what it's going to instill in every other automaker when this thing gets up and running. I think there's going to be a unified platform and variations, for example, maybe a hatchback version, particularly for Europe, a variation or two for the Chinese and Asian markets as well, and possibly some other worldwide variations on top of that. Elon Musk has already discussed the potential for designing localized versions of this vehicle, so this won't be a surprise. I'm calling this the Model 2A, the Model 2B, and the Model 2C. Of course, I'm sure Tesla's going to have better names for these by this point in time, but I'm just trying to illustrate a point. And just a side note, a few people get really butthurt when people use the term Model 2, saying it makes absolutely no sense whatsoever. Here's one way to think about it. If you take the Model 3, but then you take away some of the features and functionality and a little bit of the size, it's like you've deducted something. What happens if you deduct 1 from 3? You end up with 2. So don't get your panties in that much of a twist. But like I said, I'm sure Tesla's going to come up with a better name. Let me know in the comments below. What do you guys think Tesla should call their $25,000 vehicle? I guess maybe if we're sticking to just using letters, RIP, ICE. And I think that in total, Tesla's Model 2 variations will sell around 4.5 million units per year. Remember, this is a segment of the market that sees the most annual sales. This is what most consumers are actually spending on purchasing a vehicle. Tesla's 3 and Y at this point in time are luxury vehicles. Now, yes, they're luxury vehicles priced closer to a regular vehicle, but they're still luxury vehicles and well out of range of most consumers out there. When Tesla's $25,000 vehicle hits roads, it is game over. This is the vehicle that kills the ICE age. Of course, there's going to be an iteration after that, probably closer to the $18,000 mark in the second or later half of this decade, but that's outside the scope of today's video. So to recap, my estimates for Tesla deliveries in 2026, the Model 3 and Model Y, 2 million deliveries total, the Cybertruck, 1 million deliveries total, the Model 2, 4.5 million deliveries, and the van, around 500,000 deliveries, for a total of 8 million vehicles delivered in 2026. In my base case, and yes, I'm serious. However, in the interest of compensating for my optimism bias, we're actually going to slash this down to the figure from my bear case, just 6 million units sold in 2026. And just for the record, that's a compound annual rate of growth of less than 50% over the next 5 years. And we know internally Tesla is aiming to maintain over a 50% annualized rate of growth for well in excess of that time period. So now let's talk about software revenue. By this stage, Tesla's fleet is going to be around 14 million vehicles in total. Let's keep the numbers here ultra simple. We'll assume that half of the vehicles Tesla has sold in its history at that point in time are using Tesla insurance, and half of the vehicles Tesla has sold are also subscribed to the full self-driving service. I'm assuming $200 per month, a very conservative $200 per month for the FSD subscription, and an additional $100 per month for Tesla insurance, for a total of $300 per month for half of the vehicles in Tesla's fleet. 7 million vehicles times $300 per month. That's $2.1 billion per month of software revenue times 12 months. $25.2 billion of relatively high margin software revenue. Keep this figure in mind as we'll return to it in just a moment. By this stage, I also expect Tesla to be bringing in stupendous amounts of revenue from Dojo as a service, their neural network training service, much like Amazon Web Services today, is a huge profit driver for the company. But in the interest of being extremely bearish, I'm going to completely disregard this potential revenue entirely. In addition, I'm going to assume that Tesla's solar business doesn't even exist in 2026, despite the fact that we all know this is going to continue to scale over time. The same can be said of Tesla's battery storage business, both home batteries and grid scale solutions. And we're also going to completely disregard all the potential high margin energy revenue from Tesla's software powering virtual power plants and allowing customers to not only participate in the energy market, but also to perform energy arbitrage. That's right, we're discounting everything to do with Tesla's energy business, even though Elon Musk expects over time this is going to grow to be the same size or larger than Tesla's automotive business. Once again, in the interest of being ultra bearish, just to compensate for my optimism bias. At this stage, if I'm being honest, I expect Tesla's energy business alone to be bringing in multiple tens of billions of dollars per year, but again, let's completely ignore that. I'm also highly confident that the first robo-taxis by 2026 will no doubt be delivering people from point A to point B, Tesla taking a cut of all of these fares. But again, we're going to completely disregard this extremely high margin revenue source in the interest of being ultra conservative. I also think there's a better than 50-50 chance that Tesla will have developed and be selling a HVAC system by that stage, but again, let's ignore that as well. Alright guys, this is where the rubber meets the road. Make sure you're sitting down for this one. We're going to talk about Tesla's valuation. What will Tesla's market cap be in 2026? Therefore, what will Tesla's stock be worth in 2026? Okay guys, now, as you've obviously realized by this point, I am doing my best to be conservative. So let's assume 6 million vehicles sold in 2026 by Tesla. Now, what about the average selling price? Well, given the fact that Tesla's $25,000 vehicle is going to be making up the bulk of these sales, they will have some other products in the mix as well. I'm going to assume about a $35,000 average selling price. That's accounting for some of the higher priced vehicles being sold as well, like the 3 and the Y, the Cybertruck, etc. And also considering the fact that Tesla is going to have relatively high software revenue on top of the average vehicle sold. So we're going to multiply 6 million units sold by $35,000 and we come up with $210 billion of revenue. An astonishing number. But wait, there's more. I personally believe that over the long term, Tesla is aiming for margins of around 30% per vehicle just on the hardware itself, not including any software revenue. You guys will recall the figure earlier talking about the recurring revenue from Tesla's existing fleet, not new vehicle sales, but their existing fleet, assuming half using Tesla insurance and half with the full self-driving subscription, $300 a month, multiply that out by the fleet, that was around $25 billion of revenue. Let's back out insurance and assume that we're close to around $12 billion of revenue just from existing FSD subscriptions based on half of the fleet having the subscription package in 2026. So stick with me here. We're almost done with the numbers, but this is really important. So For every new vehicle Tesla sells in 2026, if they're selling around 6 million vehicles, if they have recurring revenue, pure profit of around $12 billion per year from existing FSD subscriptions, that's about $2,000 of pure profit per vehicle sold in 2026, not from the people buying these vehicles, but from Tesla's existing recurring software business. That's about a 5 or 6% profit margin on every vehicle sold, meaning that Tesla could be selling these vehicles with a hardware margin of around 15% and overall achieving a 20% profit margin per new vehicle sold because of this recurring software revenue. Tesla's software business can be supplementing profits on their new vehicles sold every year moving forward. So despite the fact that I personally think that over the long term, Tesla is aiming to make about a 30% margin on their hardware sales, their vehicle sales, I'm actually going to assume in this model that we're only talking about around a 15% profit margin plus an additional 5% from recurring software for a total of 20% profit per vehicle sold. We're going to assume a 20% profit on this $210 billion of revenue, and we come up with a figure of, what do you know, $42 billion of profit per year just from the automotive hardware and software. This isn't including any of Tesla's energy business whatsoever. So we've come up with a figure of around $42 billion of earnings for Tesla in 2026 based on a 20% profit on 6 million vehicles sold, excluding every other part of their business. So what can this tell us about Tesla's valuation? What will Tesla's market cap be in 2026? How much will Tesla's stock be worth? Now we have to determine an appropriate earnings multiple. By this stage, Tesla will still be growing at a compound annual rate of over 50%, which is practically unheard of for a company of this scale. The best comparisons, maybe we can look at companies like Amazon with an earnings multiple well over 60, or companies like Apple, who in terms of actual profitability have a similar makeup to Tesla, selling both hardware with reasonable margins and also a very lucrative software business. Apple has a multiple well in excess of 30 times. So I think it's quite reasonable to use an earnings multiple of about 50 for Tesla based on their $42 billion of earnings in 2026, and we come up with a conservative market capitalization of $2.1 trillion. That's trillion with a T. That is more than a 3x from where we are today using extremely conservative assumptions. I'm assuming just a 20% profit per vehicle sold, including a huge component of recurring revenue. I'm assuming just a $35,000 average selling price per vehicle sold in 2026 and just a $7,000 profit on the actual hardware of each vehicle sold. A 15% margin. Tesla's above 15% margins today. In other words, this is almost unforeseeable in terms of its bearishness. This, in effect, is not my bear case for Tesla's stock in 2026. This is my train wreck scenario. So now that we've got that out of the way and I've done my absolute damnedest to overcompensate dramatically for my optimism bias, let's talk about what I realistically see Tesla being worth in 2026. As I mentioned, in this train wreck scenario, I assume just 15% margins on vehicles sold when I assume Tesla's actually aiming for 30% plus over the longer term, so we could almost double those margins to begin with. I also used a very conservative 50% take rate on the full self-driving package, despite the fact that I'm sure by 2026, Tesla robotaxis will be operating, making huge amounts of money for their owners all over the world while they sleep. And despite the fact that Elon has promised that the full self-driving software package price will increase steadily over time, I assumed that it remained flat over the next 5 years. We completely discounted the energy business, including hardware and software, and totally overlooked the AI business as well. When everything's factored in, I think that we came up with a figure that's about half of where Tesla is most likely to be. If we multiplied 2.1 trillion by 2, where I think Tesla's actually going to be in 2026, we end up with a figure of $4.2 trillion, a 6 times increase from where Tesla is today. Let me know in the comments below. What do you think Tesla stock is going to be worth in 2026? And if it did increase 6 times between now and then, would you be happy with that result? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.